Welcome to Alpha Recap, the daily market wrap from stockalpha.ai. We're recording after the close, and today we're digging into a flood of earnings-led rallies, some surprise corporate moves, and a Buffett-linked deal that repriced a whole corner of the market. As always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. Markets closed with some pretty concentrated, high-velocity repricings across names today. Not broad market mania, but a lot of single-name fireworks.
Exactly. So, what really stands out here is that earnings and strategic moves were the proximate drivers, not just momentum chasing. We had big moves in chip and infrastructure names, retailers, and even a big housing deal.
Let's run through the headlines. Intel had a dramatic narrative shift after its mid-2025 reset. The update cited a cumulative gain of 459% from the trough, and the latest filing listed the stock around $21.58.
To put that in plain terms, a $1,000 stake made at the low would now be roughly $5,590 on that gain. That's a big recovery for a legacy semiconductor.
I mean, when you step back and look at this, those kinds of recoveries force investors to rethink cyclicality and capital intensity for older chipmakers. Not just the headline, but the narrative around how these companies turn cash flow around.
Right. And the other thing is Hewlett-Packard Enterprise, HPE, surprised the tape with an earnings per share print of 79 cents versus an estimate of 54 cents. The stock spiked about 15% intraday after management talked up AI infrastructure demand.
That was one of the clearest examples of earnings directly tied to the AI story. Analysts noted that those beats are getting outsized responses. But remember, it matters whether that revenue is recurring or one-time.
Totally. And then Victoria's Secret jumped roughly 40% intraday after a material first quarter beat and a raised sales outlook. Management said younger shoppers are coming back in a meaningful way.
Wow, big move.
Dell had a wild run too, about a 98% rally over 8 straight daily gains after solid first quarter results and a new competitive laptop launch.
8 days in a row. You never see everyone waking up bullish at once without some short covering in there.
And the other headline that grabbed attention, Berkshire Hathaway agreed to buy home builder Taylor Morrison at $72.50 per share, valuing the equity at about $6.8 billion and enterprise value near $8.5 billion.
That Buffett deal reset takeover math in housing. When a big name like Berkshire pays a premium, comparable takeout values often get pushed higher.
All right, let's shift into the big themes that emerged today. First, earnings as the proximate driver. You had HPE, Victoria's Secret, Dell, and a few others moving because of prints and guidance shifts. Analysts repeatedly emphasized these were earnings-driven moves rather than pure speculation.
Yeah, that tracks. The second theme was AI as a structural tailwind, but with a lot of dispersion. Rieder from BlackRock said he's a bit more relaxed about this AI-led rally than during the dot-com era because earnings growth and corporate cash are backing it up.
Which, honestly, I was a bit surprised by this one. There's still debate. Some managers argue the most important AI enabler might not be the headline GPU maker everyone names. That disagreement matters because it can shift capital flows and valuations.
Right. And the third theme was repricing and concentrated volatility. Big single-day moves and multi-day runs that force investors to revisit valuation frameworks across sectors.
Let's unpack a few of those major moves more deeply, starting with Intel. Analysts framed that 459% number as a kind of illustrative recovery. Again, about $21.58 in the latest filing.
That recovery is important because it changes relative valuation conversations within semiconductors. If legacy players can show a credible path to cash conversion, the investment case shifts.
HPE. We touched on the 79 cents in earnings per share versus 54 cents estimate. Management linked the beat to AI infrastructure demand, which fed into other infrastructure names rallying in sympathy.
Exactly. When infrastructure names get bought on the thesis that AI is broadening beyond GPUs, the market is effectively saying the ecosystem matters. Storage, networking, integration, that's where revenue can scale.
Victoria's Secret, around a 40% intraday jump, is a classic turnaround story. The question there is cohort durability. Are younger shoppers a sustained shift or a temporary reappraisal?
Short answer, follow the cohort economics and margins. A one-quarter beat can spark a re-rating, but durable re-ratings need repeatable customer behavior and margin recovery.
Dell's near doubling over 8 sessions shows how product cycles, earnings upside, and maybe short covering can combine to produce extreme short-run returns. Traders loved that trade today.
Not what anyone expected.
On the M&A front, Taylor Morrison, Berkshire's price per share and the roughly $6.8 billion equity value gives deal comps that matter across home builders and asset-heavy sectors. That often lifts takeover math.
And we can't ignore the smaller but meaningful items. Ulta beat and raised outlook. Core Civic showing relative strength up about 16% over 6 months to roughly $21.17. And a medtech firm securing more than $31 million in Series B funding.
Before we move on to implications, quick reactions. 3 things that stood out to me. 1. These rallies were very concentrated. 2. The AI narrative is being used to explain lots of beats. And 3. M&A from big names can reset pricing fast.
Agree on all counts.
Now, let's tackle the debates we saw across commentary. First, is AI a bubble, or is it grounded in earnings? Rieder argued earnings and cash justify it, but there are valid dot-com echoes. Data suggests dispersion, so both views have legs.
Right. And who's the critical AI enabler? The market has defaulted to one big GPU name, but some managers argue other infrastructure or software firms could be the keystone winners. That's a markets-moving question.
Then there's active stock selection versus automation. Coverage showed robo-advisors can add about 1.04% of realized value through tax loss harvesting and disciplined rebalancing. But that's modest compared to single-name alpha potential.
Exactly. Robo-platforms are useful for steady benefits, but they're not a magic wand for picking the next multi-100% winner. Active selection, conviction, and research still matter for outsized moves.
Momentum versus durability. We had intraday gaps and short streaks that excited traders. The risk is that without follow-through in guidance and cash conversion, some of these moves could retrace.
Short and sweet. Watch guidance and free cash flow conversion.
Let's make it practical. What did today mean for different investor types? For growth and AI thematic investors, the day reinforced exposure to earnings-levered infrastructure, but dispersion is high, so you want revenue that actually scales and margins that hold.
For value and turnaround investors, Intel and Victoria's Secret show how operational turnarounds can produce outsized returns. Again, verify durability with cohort economics, repeatable revenue, and margin recovery.
Income investors got a signal too. FedEx chatter about a possible 6th consecutive dividend increase ahead of the fourth quarter caught attention. And names with steady payouts like Core Civic showed independent moves.
And traders and quant players saw lots of opportunity. Big intraday swings and compressed timeframes create tradable events, but also elevated volatility. Execution and risk management were front and center.
Passive and robo users. The takeaway was automation helps with tax efficiency and discipline, but the reported 1.04% benefit is modest, not a replacement for active stock picks in volatile areas.
We should also call out market signals and the risks to watch. Guidance and free cash flow conversion are critical. Readers' comfort hinges on earnings actually turning into cash.
Valuation dispersion matters too. Big moves can change multiples quickly. Watch enterprise value to EBITDA and free cash flow yields against forward growth expectations.
M&A ripple effects. Berkshire's purchase of Taylor Morrison could lift bid comps across the sector. Keep an eye on offer-related comparisons.
And sentiment versus fundamentals. Rapid rallies can reverse if follow-through data disappoints. Look at guidance changes and sector order books, especially for infrastructure and retail names.
So what are the strategic considerations that came out of the day? Differentiate one-off beats from structurally higher earnings. Reassess thematic exposure given the dispersion. Use M&A comps to re-benchmark valuations. And keep management execution and guidance front and center.
Quick reactions. 2 short ones from me. Big move and follow the guidance.
And from me, valuation dispersion matters.
We also need to be crystal clear on the investing rules here. This is informational only. We're not recommending buying, selling, or holding any specific security. Analysts note market moves and differing opinions, so listeners can form their own assessments.
Exactly. Objective language only. Data suggests certain themes, momentum indicates others, and analysts note there's debate on where durable value will concentrate.
All right, let's close with clear takeaways. 1. Earnings are driving many of today's significant moves. These weren't purely speculative air pockets. 2. AI remains a structural tailwind, but benefits are uneven. Not every company in the story will convert that into durable cash flow. 3. Big single-name gains in M&A can rapidly reprice comps. Watch guidance, cash conversion, and cohort durability.
And remember, for traders, this is opportunity plus risk. For longer-term investors, focus on repeatability. Keep position sizing and discipline front and center.
Thanks for listening. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Catch you tomorrow on Alpha Recap. Bye for now.